When everybody gets nervous because the market is so high, the candlestick investor can comfortably hold on to positions knowing that there hasn't been a reversal signal and one of our main indicators, the T line, has not been breached. In this case, not even the 3T line, which is a much stronger trend indicator, has not been breached. Knowing this allows the candlestick investor to maintain positions, even though they might look a little bit iffy, or if there's a pattern breakout in the overbought condition, they can take advantage of that breakout because they know there's no major change in the investor sentiment in the market overall. The reversal signals identify when there's a major change of investor sentiment. Our recommendation tomorrow on blue will be based upon what we call the bullish flutter kicker signal. Notice what happened. There was a down candle. It opened here, closed here. Yesterday, it opened at or above the previous day's open, which means it gapped up. But it did a doji day, indecisive. But there's a very simple rule of the doji. If it opens positive and starts trading positive, there's a high probability of when it does open positive that it is going to trade positive. When it moves in this direction, we call this a bullish flutter kicker, which is one of your strongest reversal signals, based upon the fact that if you took out this little flutter in here, you've essentially got a kicker signal, which is the strongest candlestick reversal signal. Knowing that a flutter kicker is a very strong reversal signal, whether it's bullish or bearish, notice what happened in our short recommendation on Roku. Bullish candle. The next day they gapped it down and did a doji below the open of the previous day. Told us if they opened lower, you want to start going short because now you've got a bearish flutter kicker, or basically, if you eliminate this flutter, you've got a strong downtrend. But many of the positive trades in candlestick analysis are very easy to identify. This is what we call our message. They gapped it up, there was profit taking, but the message was they gapped it up, a lot of strength. When the profit taking is over, you can start buying. Now you flip into your next analysis. You stay long until you see a sell signal and a close below the T line. This is not rocket science. This is just identifying what the Japanese rice traders told us would occur in investor sentiment time after time. Another one of our positions, ANAB, came up, pulled back to the T line, and ever since then, it's been above the T line. How long do you hold this position? Until you see a sell signal and a close below the T line. Knowing these simple rules about what human nature usually does and applying the candlestick signals as well as other indicators like the T line makes it very easy to sleep at night, where you have very simple rules based upon what normally happens in human nature. And as long as those rules stay in effect, you stay long. That'll be it. We'll see you in the chat rooms.